Welcome to F.A.C.E, Dom. Waiting to hear your voice, your microphone. Did you choose the mic?
I did. Hi, Dale. Can you hear me?
Yes, Dom. Pleasure to meet you.
Pleasure to meet you, sir, as well. Thank you for having me. I appreciate it.
Yeah, appreciate you taking time out of your trading day to address us. Have you used Zoom before?
Do you know what? I think I have once about 3 months ago. So
okay.
I was a bit slow looking at the meeting. I was hearing the kind of the other panelist earlier. So
okay. Well, there's a green box that says share screen when we get to talking about the markets.
Yeah, got you. Yeah.
So you could go ahead and share when you're ready.
Yeah.
You're going to share your screen?
Do you want me to do it now?
Or yeah, we could do it now. Okay. We could do it right now while we're talking.
Yeah.
And I'd like to start off with perhaps you telling us about your background and your journey and how you ended up being a trader.
Yeah, sure.
You know, where were you? Was this something you always wanted to do? Was it an accident? How did it happen for you?
It was kind of interesting. I, funny enough, was discussing this with some of my my members last week, actually. And so I was about 12 years old, and my father used to. I'm basically British. I live in London, and I was 12 years old, and my dad used to buy the national newspaper called the Daily Telegraph. And at the back of the Daily Telegraph was a list of 100 shares, the F.A.C.E 100. And so I used to kind of read it, and I used to see the numbers going up and down and stuff like this. And occasionally I would pick a share and just follow it. And that was when I was 12, and that kind of got me interested in it. And then I left school early. I left school at 16, and I joined retail banking. And I started off putting checks through machines and stamping people's money in and out and all this stuff.
Wow.
And yeah, that was a long time ago, and kind of the early 90s. So yeah, that was 16.
Did you have to do that, or you were just tired of school?
I was just tired of school. I just didn't really, enjoy school that much, really. Didn't want to go to college, didn't want to go to university.
And you wanted to make money.
Yeah, and it was good money then. You leave school, I think within 2 weeks I got a job, which I was earning about, I don't know, $1,200 a month, which at the time was, made me the kind of richest 16-year-old amongst my friends. And that's what I did. I just found,
you were the first one to have a car.
Yeah, exactly. Had the car. And
had the girls.
Yeah, had a great, it all seemed great at the time. And then being in banking, obviously, I don't know, I just kind of gravitated to, again, the not trading, but looking at stocks and shares and getting involved with that. They had a kind of a securities element, and so I would kind of register people's shares and certificates and stuff like this. And I decided to, at 17, do the what's called at the time it's called the Securities and Futures Authorities exam. So it's like a bit like the American Series 7.
Okay.
And so I did that, and at the time, so I passed that on my 18th birthday. So I think I was the youngest person in the UK to be a fully qualified kind of stockbroker and could advise clients on stocks.
Wow.
And there was 3 components to it. There was stocks, and there was futures, and there was options. And there was also commodities, but I think that came under futures.
One of our attendees is making a comment about how clean your chart looks, and they wonder, is that your trading platform, or is that a charting service that we're looking at?
So it's a charting service that comes with my platform. I use a company called IG, based in the UK. It's kind of it's a spread betting firm. I use that for tax purposes. And the charting package, I think you can buy separately. It's called Pro Real Time. And
Pro Real Time from IG Forex Scale. Okay.
Yeah, exactly. But you can get it. I think you can get the charting package separately. You don't have to go via IG. If you go via IG, it's free. So
okay.
So
thank you.
Yeah. And I like to keep my charts relatively clean. They can get messy, but when you said what am I looking at the moment, I just wanted to give an overall picture of the ES and I like to keep things really simple.
Yeah. So you use RSI for momentum.
Yeah.
That's my only tool that I use for momentum is RSI.
Yeah.
Do you use it for just knowing when a market's overbought, oversold? Are you looking for divergences? Are you looking for confirmed highs and lows?
Yeah, I use it for all of the above, really. I'd like to know when it's kind of overbought or oversold, right?
Mm-hmm.
You can see on my, here when it was oversold, and obviously you got this big green candle here, right? It gives me an idea of potentially where the market can turn. And then obviously I look at divergences, and sometimes I'll be drawing sort of like trend lines. I'm just going to do one here, something like this, and see if they're broken up, and I'd like to kind of just chart the RSI sometimes. You can see there, like it's come back, it's bounced at this trend line, and I find that quite useful as well. Just to, it's an input into a decision. I don't generally trade when I'm trading intraday. I won't trade off of the daily chart. I just want to know where everything is, right? So if it gets there, where are the big important levels on the board, right? I think it's really important as a day trader. We know that. And
so what do you think about the big round number 4,000? We're going to take that out first before we correct.
I don't try and forecast where it's going. Because for me, when it gets to these big levels, more than often than not, it doesn't get there first attempt. And what I'm showing you here is this is the March low, right? This is the 2020 March low, 2174, right? And if I expand it out, we came back in October pre-election, we touched that trend line, we touched it in Feb. We went through it at the beginning of March, and we're right here, right? We're simply right here. And as I say to my guys in the room, if this breaks, it's game over, right? That's we're in a downtrend or in a retracement. I'm not saying we're in a bear market, but we could come in, we could touch 3,800, 3,700, 3,600, whatever. We could drill down, but ultimately, I'm just watching this line. If it stays above it, and I can see daily candles of like hammers, and we're touching it, and they're still buying interest, then 4,000 is definitely on the cards. It's a big round number. I know there's lots of options, the call options that are kind of pointing that way. But if it gets 4,000, great. If it gets to 5,000, great. If it gets to 2,000, great. I try and trade when I think the market has fundamentally changed. Right,
and you try and be there based upon your handle and the name of your business at an inflection point. So you think we could be at an inflection point right here, right?
Absolutely, and I think we are definitely at an inflection point. We break these 3875s, and first step will be 3892, and then 3875. Then we'll be selling the rallies, right, as opposed to buying the dips. Okay. So that's really what I think.
Okay. Are you pretty much self-taught, Dom, or did you have any influences in your career that books or mentors, or was it all just get in there, dig your heels in and just learn from doing?
It's a bit of both, really. I think right at the beginning, because basically how I got into this industry, because I've completed my stockbroking exams, I ended up going onto the live floor. So I was on open outcry, very much like your CME, CBOT. It was huge at the time. It was up to like 4,000 people running around, and it was great. So, but that was a completely different. You didn't really have charting packages. You didn't, you had your kind of pivots and stuff like that, and it was a whole different ballgame.
Did guys do? I was on the floor as well. Did a lot of guys did point and figure on index cards, and
Yeah.
so forth, right?
Yeah.
Where they did that on life too.
Yeah, you had
X's
that.
and O's. Yeah.
Yeah, exactly. And I think what is yeah, people always say, "Oh, it's great being on the floor," and but you had access to a whole lot more information, and I think there was a camaraderie there where essentially the traders looked after themselves, right? I mean, yeah, if sometimes you got hurt by fellow traders, but ultimately they were there to support you, and I think
You ever have out trades?
you knew where the volumes were, you knew where the stops were,
Right.
and so it made life somewhat easier.
Mm-hmm.
Whereas now we hide behind screens, it's all anonymous, and yes, you can look at the order flow and you can look at the DOM, but I still think that's there's a lot of bids and offers that get pulled there, put it that way, and so I think the anonymity makes life somewhat more difficult than it was on the floor, and then graduating from the floor and obviously trading evolving and charting packages and different
Yeah, a
kind of
lot of guys
themes.
had a hard time making the transition because they were basically trading off of paper. They didn't have to be directional or know how to set up a trade.
Yeah,
They just
absolutely.
went in, and so a lot of people could. Some were able to reinvent themselves, and some that was the end of their career when the floors closed.
I would say about 80%, maybe even higher, was the end of their career. And they either went into broking, right, which is some form of arbitrage. Quite a lot of them, when life went, they went to trade commodities on the oil exchange in London.
Mm-hmm.
Because it was still open outcry and they could leverage off that paper, like you say. And a lot of the accounts, a lot of the guys, they were employed by big firms, but they had their own PA, personal account. So, and they would just cross up, right? So the market was trading 56s, they'd buy and sell 54 or 58s and cross it against 56 and make the 2 points, right, in their own account. So the client got a worse deal, but, they made a few bucks. And that was how many of them made it. And of course, that wasn't really trading. That was just, kind of an arbitrage opportunity on price and the client paying for it. And, once it went fully automated electronically, that just couldn't happen anymore. So I think a lot of people left it, like I say, probably 85%. And then it's just been an evolution of charting packages and learning and one of the guys I do like is Mark Douglas. I think he really kind of started the whole, I would say, psychological and emotional component of trading. I really like him, and then now and again I go back and watch him his really old and dodgy videos that he made. But I think his principles, are sound.
Trading in the zone. Let me ask you this, Dom. Do you think that the dollar is really kind of the fulcrum of the wheel that all other asset classes and instruments spin around the value of the dollar? And if you do believe that, you have a view on what's happening in the dollar recently. It's having tried to, it's trying to bottom here. We've had at least one higher low after the low was 89.20. Then we rallied, held 89.70. Do you have a dollar view, especially against cable since you live there?
Yeah, well, I mean, cable has its own kind of issue with Brexit and the European Union, and it's kind of broken out, obviously, of that kind of 134 level and raced pretty quickly up to 140. I think with the dollar, we're an interesting, again, inflection point. I mean, a lot of people were saying.
You have a chart of it? You have a chart of it?
I will get it up for you, but I think just bear with me, right? So I think the interesting thing about the dollar was, a lot of people were saying, okay, it's going to on the Dixie, it's going to like 85, 70, and because of all the printing and stuff like that, it's going to be devalued. And I think one of the issues I have with that is that whatever happens in the world, there's always at some stage a flight to safety, and that always means that it goes to the dollar, right? So it's the world reserve currency, and it's an important component to, like you say, a lot of things, right? I mean, you can chart every time the dollar goes higher, the S&P will come off, right? And vice versa, right? A weaker dollar is good for US stocks, and then you've got the correlation between obviously dollar and gold. And a lot of people have been saying, particularly around 89.20 and the 89 area, that it was getting weaker and weaker. And I was saying, well, actually, if you look at it, I'm just trying to put up my charts. It was in a declining wedge, and at some point that wedge was going to break out. Let me just.
All you have to do is, just bring up a different chart on this screen. Otherwise, you stop the share and then start a new share.
Exactly. Okay. Just see if I can change security here. So, all right, so I'm looking at the screen rather than the chart.
Okay, so that's still S&Ps.
Yeah, 1 minute, sorry, apologies.
It's okay. Next time you'll be ready to maybe talk about a few different things instead of just one instrument. So if you're having some trouble with this, maybe you want to talk about your business model.
Yeah, 2 seconds. Now I'll bring it up. I think.
Okay.
So, can you see the?
Yeah, it's underneath it. Is that what you're showing? The little, little blue and gray. Just a comparison chart with dollar getting weaker with the S&Ps going up, but it's a real small grid. Yeah.
Can you? I've got it to the full screen now. Is it on? It's on the screen because I think.
No. Okay.
Oh.
Because it's showing underneath the S&Ps is where the dollar is right now. You see that?
Yeah. Okay. I don't think I can change share. I'm struggling. Okay, I'm sorry.
Okay, you'd have to stop sharing and go to another one. So
can I do that? Or no, you don't want me to do that?
You can do that. Sure.
Okay.
We have time.
Can you see the dollar now?
No. Where would you say your trend line? Okay, now we have it.
Yeah, so I'm going to delete the Bollinger's. I like to have Bollinger's on my stuff as well, just to give an idea of what's going on.
I just was curious where that trend line would break on the S&Ps ballpark.
It's 38.92.
38.92 breaks your uptrend. Okay.
Yeah.
Thanks.
So I was saying the dollar. I'm just going to draw this roughly, but the dollar had this kind of declining wedge here, right? And it's quite kind of steep, and something like that, and then basically it broke out, and then it came down, and then, like say, around the 89 mark, I was like, well, it can't continue here. At some point, it's going to break out. And actually, you had a nice morning start pattern there, right down, doji, back up, and then on the daily, you've got a series of trend lines that are pretty much held, and then it broke through rather recently, and now it's come back up above. And I imagine that 92.47 would be some form of fib between the 89s and the 95s. It's probably a 50 back fib. And I think,
what's that blue line right there that you're pointing at?
This is this blue line here, the dot dash one.
No, the solid one underneath.
Solid, that's my Ichimoku. I use Ichimoku again.
Okay.
So,
all right.
So it's funny because the guy was saying, my charts are relatively clean. I cleaned them up for show. Yeah, I clean them up for show because I'd like to, because if you have Bollinger Bands on top of this, on top of Ichimoku, it can look really messy. But once you get used to it and understand that essentially they're moving averages and standard deviation, you can quickly glimpse. For me, it's about whether something is what I call in the middle. With an RSI of 50, it's hitting the middle band. Rather than what I really like to kind of trade as well, when something's at the edge, which is oversold or overbought, or knowing that something is essentially exhausted, right? And looking for kind of, not necessarily looking for tops or bottoms, but just knowing where kind of max resistance or max support is. And just going back to the dollar, I just think my fundamental principle of the dollar getting weaker is that can't work, I think, with rates going higher. Right. So there's a kind of contradiction in that, right? Because if rates are going higher, people are going to invest in dollar assets, particularly US Treasuries or whatever, and so therefore the dollar should get stronger. So I think it's really difficult to turn around and say, okay, long term, yes, there's a debasement of the dollar, and it's going to get weaker and weaker and weaker because they're printing and printing and printing. But if you look around you, the ECB has been doing it for years.
Yeah. So you're like, could I say you're constructive the dollar?
I'm what? Sorry.
Constructive.
Yeah, I just don't see a.
You're not long.
No, I was long at 89, but I'm not long or short now. I think I think it's in the middle, and I think the most important thing at the moment is rates. Where are rates going? Are they going higher? Is it the new norm that we're going to see a movement in rates? Because the higher the rates, for me, that would be supportive of dollar. So I think, but that doesn't necessarily mean I think it's going back to 100. You know what I mean? It just means that.
How about 97?
Yeah, 97 is doable, easy. Yeah.
Okay.
Yeah.
All
I mean,
right.
I'd be playing the fibs, right? I'd just be playing the fib between.
I like the confluence at your Ichimoku right there, the blue and the red dotted line confluence there.
Yeah.
It kind of looked like a little ABC if it pulls back there.
Yeah.
Anyway, nice looking chart. So, you misrepresented yourself as a naked trader, and I see you with a lot, a lot. This is not trading naked. This is trading with your battle dress on. So,
I mean,
all right.
Yeah, when I generally trade off. So what I tell my guys is know the big picture. Know where you'll get, what could happen, right? What could happen, and then I generally trade off, the 5-minute chart. So I have all this information here, and all this is telling me, Ichimoku is just essentially a bunch of moving averages, right? So and then the dashed blue line here, is the 5 SMA. This dash lighter blue line is the 200 SMA, right? And so I can just gauge. For me, it's about, is the market strong? Is it weak? Is it, are there confluences around? So like for instance, you've got a trend line from the bottom here, right? Follow the trend line. It held there, right? It held there. It broke there. It found support here. We touched it here. If we come up here back into this 92.43 area, it's a double top. It's probably going to be resistance, right? So I just need to know this when I'm trading, and that's for me. Like I say, my business model is in terms of inflection points, and trying to be on the right side of the inflection points, right? Even if you're on the wrong side, you're in a relatively safe area, right?
Yeah.
Because if it does break, go on. Sorry.
Yeah. So if we get that 92 close over there, I'd say it's a pretty high probability that the S&Ps will break down under 38.92.
Yeah.
Don't you?
Yeah.
Probably
absolutely.
sooner than that. But
yeah.
All right. So I'm thinking the dollar moves sideways, so the S&Ps could get above 4,000, but we'll see. Kind of looks like it's having trouble closing over 92 right now. Do you want to show your website and the best way for people to follow
Yeah.
you, Dom, is
Yeah.
on Twitter, or how do you want to do this? What's the best
Okay.
way for people to follow you?
Just
Twitter?
let me just put up. It is on Twitter. I have a Discord room.
Okay.
And so I'll just kind of probably explain, why I'm around and what I do. Can you see my trade inflection website?
No, but I could show it. Here,
Uh,
let me take it from you.
should come out. Oh, resume share. I have to press resume after.
Yeah. Okay. There you go.
There you go. So, the reason, the reason I got on Twitter was, it was just a friend of mine. He said, "Oh, you should look at Twitter. There's got this whole FinTwit thing going on," and this was about sort of like 3-4 years ago, and I never used it. I just traded for myself, and I didn't even have Twitter on my app, on my phone. Sorry, and I started looking into it, and I started. I worked out that you could follow people who did the ES and various products and instruments and stuff like this. And what amazed me, for me, the most important thing is in trading is not the levels, right? Because if you know how to read a chart, and if you look at kind of order flow and various different techniques, you know where the levels are, right? So I've just given you, for instance, a chart of the ES, and it says, here's the trend line from the March lows. It comes in about 3892. If it closes below there, then we're looking to sell rallies, and we're looking for weakness. And if it stays above that, it's continuation of trend. And I used to get very frustrated with people on Twitter, because for me, if I'm going to give you my advice, and I'm going to give you the knowledge that I have, it's got to be in real time. And there was no one doing it, and there still isn't people doing it in real time. So I kind of said to my followers, as it were, look, guys, anyone can say, I'm going to flip a coin. It's either going to be heads or it's going to be tails, and can come back an hour later when the coin's flipped and say, look, I told you so. It was tails. I told you so. It was heads. And I find that this either or kind of option on Twitter, and then coming back 2 hours later or an hour later when it's hit price is just I don't think giving anyone value. And so what I try to do is and I have done is created it all in real time. So for instance, if it's trading, like last night it opened, and I said, look guys, the level is 87. We'll go long at 87. We went long at 87. We got out at 98. We made 11 points. And people, I think, need the knowledge at that moment in time. So if the market's trading 50, I will just press out. I have my own Discord channel, and I can just say long setup, buy 50, stop 46, target 60, and then that goes onto my Twitter account at Trade Inflection. There's a 5-minute delay, and then if they pay me, join the subscription, you can get it on Twitter, or you go via Discord, etc. And so for me, I think that is the most valuable point. If people are gonna follow you and people are gonna learn from you, you've got to do it in real time, because anyone can do it in hindsight. That's just the easiest model out there. And so,
you know what I think is even more valuable is when you can call a trade before it happens and have your entry already planned ahead. I mean, my best trades are made on the planned on the weekend.
Yeah, absolutely.
When the markets are closed. So there's a lot of times you have to, you're executing, and maybe it's something you didn't plan on the weekend, but I know coming into the week where and what I want to do. And then all I have to do is execute. So I think actually giving people a heads up on where's a good entry instead of we're doing it right now.
No,
prepares
absolutely.
people for it. So,
No,
that's what makes the market.
Yeah, sorry, Karen.
That's okay. That's what makes, everyone has their own style. And I believe preparation is the most important thing. And what prevents impulse trading from me is having a plan beforehand.
Yeah, absolutely. So, I mean,
right, buddy?
I do a weekly video, just giving kind of the high level inflection points, So for instance, this week, 3892, You know, if we're below that 3875, then you know what I say is, you know, we're singing a different tune. We're going down. If we're above 913 and 935, then we're looking to go to the highs and potentially 4,000. And then on my Discord channel, I have a voice channel, right? So I'm on it constantly. So I will prepare the guys to say, look, guys, if it gets to 07, we're going in. If it gets to 15, we're going in, right? So they're ready. And then bang, I'll go, right? So, and then obviously I'm putting up charts during the day and stuff like that. And saying, look, this is why I took this trade, right? It's the third time we touched it on the trend line. It's the 50 back of the move. It's we're going up. It's a trend day to the upside. We're going in, you know. So, and then, you know, and as I teach people as well, it's the same approach, right? And
you know what happens when you survive an interview with me, with Dale Pinkert, coach?
No,
you become my trading warrior brother for life.
That's good.
You'll accept that? Okay,
yeah, good. I accept.
All right,
that.
bro. All right, so I want to thank you, Dom, for your time, and I'd like to have you back, and maybe you'll have the hang of changing more charts, or, you know, kind of
absolutely. I mean, just if you give me kind of you know, now I know the process, and if you want me to kind of give you an overview, I'll do like say a weekly video, and I can expand on that, and we can go into kind of potentially more products and stuff like that. But like I said, the first time I didn't know how this would pan out, but
you did great.
Yeah, I appreciate.
You did great. You did great, and you know what? I hope every inflection point that you see goes your way for you and your community.
Yeah, good.
All right, buddy.
All right, good to talk
or
to
as you say, mate.
Mate, yeah, exactly.
Right.
Yeah, exactly.
All right, everyone. Thank Dom for his time, and you know where to follow him at Trade Inflection. And Dom is a pro, and he had lots of money and girlfriends at 16, and a nice car, and he probably has more money and less girlfriends now.
I was going to say, I had it all at 16, lost it all at 21, and then came back.
All right, man.
Okay.
So, Dom, I appreciate it, buddy. Have a great trading day, and I appreciate getting to know you.
Take care. Thanks, Dale.
All right. All right, everyone. So that's a wrap. Remember, don't just count your pips, count your blessings, and we'll see everyone for Turnaround Tuesday. The Morning Edge starts in 14 minutes. Adios, everyone.